Testing. Hello. Can you hear me? Hello. Testing. 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 One, two, three. Sorry guys, I'm on my AirPods right now. I'm doing this live stream from bed. Okay. Perfect. Let's hit that like button, ladies and gentlemen. Hit that subscribe button if you haven't already. Blue, what am I wearing? You don't want to know, my man. You don't want to know. I don't want to make this an OnlyFans for X-Force Global. Testing. Testing. Okay, it should work now. I was going back and forth with my iPhone and I was like, what the heck? There we go. Oh, Alrighty, alrighty. How many likes are we at right now? We're halfway there, man. We're halfway there. Thank you, but no thank you. Oh man, it's been a while. Black Syndicate, I remember you. Black Cat Syndicate. I've seen you pretty much in every live stream before. It is, man. It is. We're part of that cycle where everyone hates each other, and I love it. To confuse the enemy, you must confuse yourself first. Quoted by Sun Tzu. That's a good question, back on. You said if Bitcoin closes below 133 or 103K at the 55 EMA, does that mean we'll never or we will ever, or very likely, a bear market since it closes on the weekly always lead to a bear market? I'll actually go over that. I'll talk about the moving averages. It is very important when it comes to simple technical analysis. So we'll talk about that. If everyone has questions, just like what Backon was asking about, please do ask your questions. I will try to answer those questions. There's been increasing interest in your content here in Brazil. Please try to always leave translations enabled. To be honest, I'm so technologically not advanced. I don't know how to do that. So I just like started using ChatGPT this year, like efficiently now. Good questions, everyone. These are really good questions. Like people are talking about capital rotation and why ZEC and Dash, why they're performing and all that jazz. So keep asking those questions. I'll get to them. Don't worry. So make sure to ask them. Actually, before we do this, we should just go over like uh the macro structure, right? Macro. There we go. We'll start from like a top-down analysis. Uh, let's see where we're at. We're almost there, everyone. Actually, I'll just start right now, man. I'm tired. Everyone, these are great questions. Please ask all of your questions. I'll go over them as best as I can. I'll try to keep it simple as possible. So just keep asking any questions you have. I'll be making sure to go through them one by one. If they have substance in them, then I'll definitely answer them. If there are questions like, "Hey, can you look at this coin and that coin?" No, that's something I can't. I don't have the brain capacity to do that right now. All right, so welcome everyone. Thank you very much for joining. If you are new here, please make sure to hit that like button. As always, subscribe to the channel if you haven't already. Again, just gonna market my Discord for a second. If you're interested in joining the Discord membership, I do offer a Discord membership. Um, the links should be in the description below. I also do offer a Patreon where I do 2 updates a week. So there is a way to get more of my content on a weekly basis, or if you want a more daily basis and just more sentiment updates, the Discord membership is going to be for you. So if you are interested in joining that, please use any of the links below. So thank you very much for joining. We're going to start with a top-down analysis on Bitcoin. Um, a lot of things are happening right now. Or to say the least, a lot of things are not happening. And I think a lot of people are seeing this current range here or this drop that we had as some kind of panic mode. And it's okay. You can feel that way. We had a 20% drop. That is a lot on Bitcoin if you think about it, considering that, we've been just flip-flopping back and forth in this entire range ever since of even January 2025 of this year. It's kind of crazy. We're already approaching that 1 year anniversary of just kind of going back within this range of this previous all-time high at these six-digit levels. So it is a time where, a lot of people are probably wondering whether we are entering or transitioning into a bear market. And I'm here to say, as with, all the data in front of us, to me, I would say that we are still within very, very strong bullish territory. It doesn't really matter what happens in the shorter time frames. I really do think that we are in bullish territory, and I'm going to go over all the reasons on that, not just from LUA perspective. I think it is still, even with an LUA perspective, that we're in a very, very bullish structure. There are some market inefficiencies that we have to kind of iron out. However, the overall structure is very well intact, okay? Now, there are some pros and cons to each scenario. Even with the bear scenario, no scenario has the best scenario. We just got to work with all the probabilities as best as we can. And right now, I am seeing this still as what is a wave one, two, three, four. That's now complete, and we are now working in an extended fifth wave. Now, not everyone is going to agree with that, and the reason why is because fifth waves being extended are very incredibly rare, actually. But it is really the only way to do it when you're narrowing down the possibilities or probabilities as best as we can when it comes to using the wave theory. And then whatever evidence on top of that, we kind of make sure to work upon whether this scenario is right or the other scenario is right. Okay. So here, what we have again, the reason why I'm still seeing this as an extended fifth, starting off with the reason is just due to the fact that we've been creating consistent highs. Okay, we've been creating a new all-time high here. After this move here, where we originally thought that the fifth wave has ended, and even then, back then, I was actually considering this to be a bear structure. Just using the replay tool, which is very important. If we pull up the replay tool and just kind of start with a clean slate, it's very important to understand that at this specific point in time, when we didn't create a new all-time high, you can see there was even a higher chance for a bear market at that time where we had a very clear five-wave structure to the upside. No way of, objectively clear. At that time, bulls had every right to say that this was turning into a bear market. And it's absolutely clear that we even broke structure of this channel. And that is why, even at that time, I was even seeing this as an impulse structure to the downside as a wave one, two, and then three, four, five, eight into an A, and then a B and a C. But fast forwarding in time, look what happened. we broke the highs again. This move here. So there has to be an objective shift in not only the market psychology behind that, but also from an Elliott perspective. So this is the root of all things that you have to understand. When you have an objectively clear five-wave structure up to this point, and you had an objectively clear impulse to the downside at that point, and we fought back and forth between whether this was a WXYZ or even a five-wave structure, right? We broke back above these all-time highs three times, right? We had three peaks basically. And that is why when we put it all together, we still have to now go back to why this is an extended fifth wave, as how bad as much as we don't want this to happen, it is the only clear way of looking at it. So this is why I'm still seeing this as an extended fifth wave. Now, that's also coming into factor with the very basic roots of the market psychology of what a lot of bulls are seeing, which is, can this be the first time where Bitcoin actually goes into an extended bull market cycle? I'm also going to go over that as well. And if we actually look at the mega larger structure of this, from a halving cycle perspective, right here on the weekly time frame, you can see that this, it's still fine from a timing perspective. We're just missing a parabolic slope that we've, witnessed from a fractal perspective. We've had waves 345, 345, and 345 after each consecutive halving cycle. This is the only time where this wave three was ahead of schedule before the actual halving event happened. And because of that, there's two ways of seeing it. Are we actually ahead of schedule that wave five has ended here and we're now going into a bear market faster just because we went ahead of schedule for a wave three? But in this case, instead of seeing it from that perspective, everyone missed out on this wave three, and that is what backs it up from an objective psychology perspective, that this wave five, this missing parabolic slope that we had in every previous cycle, it's now shifting into a different wave count. It's turning into a different mature count, is what I'm trying to say. So that's why we're seeing this as a wave one, two, three, four, five for this extended fifth wave to make up for what has happened. And from a psychology perspective, when you have an extended fifth wave, these usually happen in observance of people missing out on this wave three. Everyone that missed out is going to be going into this wave five, and that's why we're kind of objectively seeing this as an extended fifth wave. We already have the first few components of what could be this extended fifth wave, which is this wave one, two. We're just now validating. And since we had a few months of upside, it makes it, transitioning into that second step on validating this minor degree wave one, two, three, four, five on the local time frames. So as you can see from that evidence-based approach, just from an overall timing perspective of the halving cycles, this just makes the most sense, right? It's the best way to fit it in. And with my evidence or my theory is that we missed out on this wave three, and now everyone is going to be coming into this wave fifth or wave five. So that's way of seeing it. Now we do have another way of looking at it, which is a flat idea. It would be just a little bit different, meaning that we could possibly be seeing this as a flat structure. Now, I don't like this idea, but it still fits in the macro structure, which is why I'm still entertaining this idea that we can come down to $58,000 before we actually start going up and then go down for a wave four of some sort. But that, in my opinion, I would say that we're going to be ahead of schedule once again for this wave three on the primary degree, right? That's why this is a little bit off in that sense as well. So it's still the best way to see this from a clear perspective is just um, simplifying it and saying that we're working for an extended fifth wave. So hopefully that was helpful in that regard. Now going back to the local time frame counts, I think it's important to talk about. If we pull up this once again, you can see here that following up for that wave one here, this wave two, we are starting to run into some inefficiencies when it comes to the timing, the guideline perspective, where this wave one, two is now starting to get longer in time, not in the severity of the depth, Rather, we're seeing it larger in time against this previous wave one, two. So that could be an issue in that regard as well, which is also something that I'm taking into consideration. Maybe this one, two is not really a distribution. Could it be part of something else, which led me to that idea where we could be working in a more bearish structure, which is this structure here, where we're seeing a larger expanded flat zone. But this doesn't come without its own issues, which is very, very hard to say that, first of all, this is pretty clear as a WXYZ, right? Usually, I would even go as far to say it's invalid at this point, but I know there's people out there who are also trying to utilize the wave theory and, you want to validate it in your own way. You would not see a triple zigzag in the first structure of a wave A, where you're seeing this as a wave one, two, the first component being, a triple zigzag, which could be a variant of a three-wave structure, but you have another market inefficiency that follows right after that, which is this structure here, an ABC going into wave W, flat for wave X, and then an ABC going up for wave B. Now, I'm not saying that's, uncommon. We've seen long wave Ws or long wave As and short wave Ys and short wave Cs. Comparing these two structures, these are not uncommon. So it is more of a minor market inefficiency, but this here would be the biggest market inefficiency, which helps reduce this scenario to be more or less probable in that case. And in this case, in order to follow up, which I'm sure a lot of people are seeing on the local time frames, is a five-wave structure that leads us into a wave one, and then we have a wave two here. And now this would be a five-wave structure going into wave one, two, three, four, five, into a three of this move here, and then a larger wave four, and then five that would follow suit, which would be a three, four, five that could finish off this wave C, and that would be the larger ABC structure. Now, this again, larger timing perspective, this wave A is quite short in time. When you have waves B and wave C quite heavily extended in time against this wave A, where wave A is also a market inefficiency in itself, where it's a WXYZ, you have a problem that this is not going to be likely the case. And it's understandably so, because that's where the confusion a lot of people come up with, where, like I said, um, if we go to that larger macro perspective here, it does look okay when you have a wave one, two coming into play, right? It's not this one. It's not this one. This one. Sorry, I'm doing this on my laptop right now. So, this structure here, where you have this ABC, and even on the macro, it kind of looks weird, right? I mean, it looks really not like an ABC structure. I mean, it's already you can see how elongated this is, how short wave A is, and then if you have a top-down analysis that doesn't look correct, if you have a bottom-up analysis on the local timeframes that doesn't also match up with it, this scenario is likely the least probable scenario, right? So even though if you zoom out on the mega structure, a flat structure being a wave one, two, yeah, it could happen, but it's most likely not the case. So this is why we keep reverting back to this idea here. It just makes the most overall sense, even though not every point makes sense, as clear as it can be. Just starting off with an extended fifth wave being the most rare type of pattern. You have to work with all types of patterns and try to build it with the best of your ability when it comes to the probability aspect. Okay. So no, this idea is likely less likely here, where we have a flat idea. So if that idea is out, what else? People are talking about, okay, zooming in, do we have a potential way of seeing this as an ending diagonal? And I know whoever is watching me on or whoever is following me on X, if we should zoom in even further, right? They're seeing this as an ending diagonal of some sort, like this. um, which is probably still in observance, meaning that this wave one, two 3, 4, and then a fifth wave could end here. Now, there's problems with this, all right? And if you're an Elliottician and you're seeing this, so you probably want to listen up because I'm going to explain on why I think this is not likely the case, even though from a structural perspective, when you're connecting the dots, it does look like an ending diagonal. It really does. And you even, up to a certain extent, objectively have the proper divergences being created between waves 1, 3, and 5. And those are usually what you want to see. But 3 and 5 is not observing a divergence, right? And wave 1 is not observing a divergence as well. So this is the first objectively clear reason why this is not an ending diagonal. Within an ending diagonal, you usually want to see not only dissipating volume, but divergences between at least waves 1 and 3, but at the very, very least, waves 1 or 3 and 5. We don't have that. And you can see the price extremes happening. If you line up this point to this point, you can see there's no divergences being observed. Okay. And this is on the daily time frame. That is the reason why, the number one reason why I rule this out, because usually almost 99% of the times you'll see within an ending diagonal volume being dissipated, but the price action working against each other. And that's usually that divergence you see between an ending diagonal. Even on the leading diagonal, you'll see usually a divergence happening. So that's number one. So no matter how structurally this looks nice, that's not the case. Now, number two, why I think that this is not an ending diagonal, okay, is because of this structure here. It's objectively clear as a five-way structure. This is not a leading diagonal, ladies and gentlemen. This is an ending diagonal. No matter how strongly I try to count this as a three-way structure, I don't see it. This wave here was just far too impulsive for our liking. It broke a previous top. This is more indicative of a wave three. Okay, so okay, maybe you see this as some kind of WXY of some sort. I can't, to be honest, I can't fit it in there. And this is why a lot of people aren't putting out the work. They're not showing their work, saying that this is a wave one, two, three, four, five. Raise your hand, man. I'm telling you right now, the people that are watching this are probably guilty of this. Like they can't figure out on, why this may be a three-way structure. Sure, okay, fine. You now have to work with a triple zigzag pattern here. We already talked about this being a very strong in-market inefficiency. It's more a resemblance of a larger wave one, two, right? Not only that, you got a problem here too. This structure here. This A, B, C to the upside, W, X, and then Y, right? We've already ruled out that idea that this is not a structure as well. This is more indicative of a local time frame diagonal, okay? So this is definitely out of the case. This was impulsive out of structure. You have an A here, you have a B here. Sure, maybe you could fit a 1, 2, 3, 4, 5, but does this really resemble a five-wave structure? I don't think so. You got to make sure to count the major swings. And right now, the major swing is just this 1, 2 string structure, but everything in between, you have a problem there as well. The only great observance of a three-wave structure of this ending diagonal is this move here, this fifth wave. That is why I don't think that this is an ending diagonal. Okay, if you can prove to me with paramount evidence that this is an ending diagonal with all the internal counts, I've already disproven that this is not an end just based on the the volume that you should be seeing um, following up on this, and also seeing some divergences happening on the RSI divergence indicator. We don't have that, and that's the problem. So if you have those two and all of these market inefficiencies in between, you run into a major problem. That's the reason why I don't see this as an ending diagonal. Okay, and that is why my case in point, even though this does look pretty darn nice on the macro structure, I'm sorry, this structure has to be ruled out. So what does that mean? We go back to the idea of the least or the best of the worst is what I'm trying to say, which is an extended fifth wave. It still fits the overall case of why I'm seeing higher levels, even though we are distributing at these levels. Okay. And we're going to go over other major reasons as well. Okay. Which is Ethereum. If we look at Ethereum, you have to also prove to me that we have to break below the golden Fibonacci level of the 61.8%. Okay. Right now, Ethereum is also very clear that Ethereum is one of the most important altcoins that kind of when it's low volume gives us a sense of direction when it comes to the altcoin markets, right? We looked for a 1, 2, 3, 4, 5 here. We're now in a larger wave 1, 2, just like Bitcoin. But interestingly enough, this is where the double zigzag pattern can actually come in to play. An ABC here and an ABC here. But first, before we go into that, I want to talk about another thing that a lot of people are mislabeling in their accounts, which is they're seeing up to this point, they do a great job of pinpointing this to be a wave one here, a wave one, and labeling this as a wave two. And I'll show you why this is not the case as well. And saying that this is a WXY structure. So if we move this here, a lot of people are seeing this as a WXY. And as much as I want to see this as an ABC structure here, it's most likely not the case. It's part of something else, which is that diagonal idea that I was talking about, right? That's why this is most likely not the case. Uh, uh, can you hear me now? Okay, you should hear me now. Can you hear me? Can you hear me? Say yes. Okay. So what I was saying is this cannot be a double, a sideways combination as much as you want it to see. This is not a double zigzag pattern as well because you have a new price extreme as well. So that's out of the case here, ladies and gentlemen. That's not the way to look at the structure overall, okay? And that's the reason why this cannot be a WXY as much as I want to believe that this is an ABC structure. Structurally, it looks like the best as a ABC, right? You have a five wave here for A, B, and then a five wave structure possibly for a wave C here for a wave Y. And because of that, sorry, ladies and gentlemen, you cannot have a WXY structure here. So that's the biggest misconception here a lot of people are saying. The only way that we could fit this in is a three-way structure for a wave A, three-way structure for a wave B, and then you now have to somehow fit in a wave C, and the only way I can fit it in is a diagonal structure here as such. You have a clear three wave here, now working for wave four, and then one more move to the downside, and then we're off. That should meet us around the 50% level, right? I don't even have to draw this out. So if we pull up the Fibonacci levels from here to wave one, look at that, bada bing, bada boom, right into that golden Fibonacci zone. It could be into that 50%, that Goldilocks zone between the 50% and the 61.8%. That, ladies and gentlemen, is the reason why we have to be very clear about all of the pinpoints and the net price actions, okay? So this is why I believe it in such a way where you have to make sure that everything is lining at least on the very basics of daily wave theory. Okay. But other than that, that's really the only way. I don't see anything else. Those are the only two scenarios. Now, if you're asking me, okay, how can we fit it in then? How can we have a WXY structure? Well, there is a way. There is a way, which is this here. But I don't like this either because you now have a market inefficiency of this wave one, two, and then wave three being extremely large, and then you have a fifth wave of some sort here as well. But it's the same idea here. If you want to put this point here, I fixed it here. So if we want to utilize this diagonal in the same position for this wave one, what you can have, ladies and gentlemen, is an ABC flat here for wave W, a flat for wave B here, expanded flat for wave X, that is, and then a wave Y as a zigzag. This now fulfills what could be a sideways combination. We've seen this happen in the past. We've seen it happen, this area specifically, where we had a wave 1, 2 here. We had a W, X, and then Y for as a triangle, which is also a possibility here. So you can see wave Y could be a zigzag or triangle. So this is one way of looking at it as well. So there's only two ways of looking at this. I'm going to summarize this very simply because I'm extremely tired and I want to go to sleep. But you can see here, there's just two ways of seeing it. We're going to go for one more low for this diagonal that comes down to the $96,000 levels, which was our original idea, by the way, in the first place, right? Or we go up now. The low is protected, and we go up, and I would start to believe that we are working in a larger ABC flat to the upside, possibly even up to this 161.8% and say that this is a wave X here. And then if, we're going to distribute a little bit further, maybe a WXY in this sense as well, where we have a flat for wave W, a flat for wave X, and then some kind of zigzag or even a triangle being in play here. Whew. It's a lot of saying here, man. But you see why it's so complicated? It's the only two ways of looking. And that, ladies and gentlemen, is the difficulty of the Elliott wave theory, making sure that we narrow it down as best as we can to these probabilities. So to me, I am seeing with everything that I said up to this point, from the evidence of that extended fifth wave up to this point, even on the local timeframes, this is how I'm coming up with these last two scenarios, okay? So we have this ABC structure as a flat where we come down one more time and then we go up, okay? And I'm sure a lot of people are hoping for this because I'm sure a lot of people are short here right now as well. And that is the biggest risk right now. That's the biggest risk if you're in a short, because you're probably trying to catch this last train here, this last 9 to 10% move to the downside to get out of your shorts. And you're probably already drowning in your shorts as we speak, because you're probably in a short in this region as well, right? I'm not dumb here, ladies and gentlemen. I know what you guys are trading and I know what you guys are doing from a market psychology perspective, and I use that to my advantage. So that's that. And then, like I said, the only way is to move up from now, create higher levels. And here is why I am quite bullish on Ethereum as well. Okay. Now, Ethereum, since it didn't create a new price extreme, even if you want to label your wave X over here, it still is below the previous top, which could be deemed as either completed at the 38.2% or come down just like to Bitcoin, that 50% level that we were talking about. Either way, it could be a WXY and we have an A, B, C, D, E for a triangle for a B wave and then a C wave that just completed over here. So this could be a WXY in such a way, but I don't like this wave X. So I like to see this as a distribution zone. And maybe we are going to go for one more move to the downside, just like for that diagonal. So even on the local timeframes, I am, from a data perspective, kind of agreeing with the bears that we are going to see one more low before we actually move to the upside, right? So that is just one way of seeing it. But either way, you can see all roads lead to the upside. And that is why this wave 1, 2 is just objectively clear that we are still in a very bull market for Ethereum as well. Now, the last 2 points I want to make in this live stream is the Bitcoin dominance, something that a lot of people are also not taking into factor, which is that we have a clear five-wave structure up for this wave one, and now this was an ABC to the downside for wave W, X, and then maybe a flat structure as a three-way structure into a wave A, and then a B, this dotted path here, where we come back up, retest maybe 67 to the 70% level for the dominance, and then we move down. But either way, it's still aligning with quarter one of 2026 that we're going to go for even a bigger bull market for altcoins. So what's that's one way of looking at it. Absolutely insane. Absolutely insane, in my opinion, that we are going to be still working for what is going to be a massive alt season. Okay, that's a lot of evidence, man. Up to this point, I'm telling you, this is like I'm not even theorizing. We got to work with everything. We can't work against one chart for another, right? Everything is aligning with each other instead of working against each other, and that's the biggest difference here. And if you're looking at the USDT dominance as well, which is something that I absolutely despise looking at, well, since a lot of people are asking, what about the stable coins? Isn't a lot of people going back into stable coins? Even with this here, an ABC going into wave W, an ABCDE for a triangle for wave X, even if this were to be invalidated, this should just be one piece of evidence that would be invalidated if everything else were to come into play. As you can see, people are still on the sidelines more than anything else, right? There's some people trying to get back into the market, some people are trying to exit the markets, and that is why we had a huge disparity with this price action since 2024 going back and forth. And that's why I think we are going to see one of the biggest liquidity crunches for the USDT dominance, where every single person is going to come back into the crypto markets and we're going to create another low where everyone is going to be doing risk on, risk off, risk on, risk off for all these assets, including the stock markets. This is a clear sign that if we are going to get validated, objectively clear distribution being created for wave X, this is going to be a humongous liquidity sweep of everything. Every shorts are going to be liquidated, in my opinion, at this point, if it does happen. So, taking into account, reversing, if I were to press the rewind button right now, number one, USDT dominance is absolutely looking like it wants to go for a move to the downside. What does that mean? If it goes down, it means that everyone is exiting stables and going back into crypto. Okay, does the Bitcoin dominance support that? Absolutely. Even if it were to create another high, it still leads to the downside. If it were to go back down now, it still leads to the same targets of around these levels over here, which aligns very nicely with a very highly saturated market of the altcoins, which is lying around 50% to the 55% level, which is arguably a healthy level that has been trading around these levels for quite some time. And we've had distribution for this wave 3 and 4 over here. This level is a very good support zone for us to land at and is a very strong magnet around those levels. And 50% means that, there's still arguments for Bitcoin being one of the strongest assets, but at the same time, the rest of the markets are, dispersed within the altcoin markets. So that's argument number two that aligns and not working against each other, that aligns with each other with the USDT dominance. Okay. And then you have Ethereum that works in a wave 1, 2 of some sort. You have a clear five-way move to the upside. WXY, boom, leads to the upside. What about Bitcoin? This is our last one. Does it lead to the upside? On all regards, in my opinion, I've talked about why the bear scenario doesn't work out. I've talked about why the local timeframes are working with each other, not against each other. All of these pieces of evidence is now working in tandem with each other and intertwining with each other from a market psychology perspective. And that is why we use that to our advantage to understand the general direction of Bitcoin. And most importantly, the crypto fear, greed, and index. This is the very first time we've actually entered extreme fear for the very first time in a long time. If we go back and use the maximum value, the beauty of the crypto fear and greed index is that it is only working within a value between 0 and 100. Every time it's reached a very, very extreme level, which right now we are arguably at the extreme fear, this doesn't lie. It's always bounced us back into at least the neutral zone. So they're at the very minimum, even if you're bearish or even no matter how bullish you may be, or no matter how bearish you may be, at the very minimum, you should be expecting a relief rally to the upside for Bitcoin, a relief rally that is. And if it goes in our case, which was me theorizing that we're going to go for more all-time highs, should go back into the greed territory once again. And at that time, we can talk about a major pullback, where I've always talked about a major pullback happening when it hit extreme greed. I have always done it time after time. Every single time I have worked against the markets and against the markets in terms of the psychology of, social media. I've never worked against the markets. I've always worked with the markets, I should say. So every time I hit extreme greed, that is a time when I've turned bearish. And a lot of you know that when I'm bearish, right? You guys know this. When it hit extreme fear, you guys know that's a time for opportunity to buy back into Bitcoin, right? And that is what I'm talking about. Okay. So let's see what the behavior was back in March of 2025. See, March 2025, that was when we had at that point, a wave five being the strongest case for a bear market scenario. That's what actually led us back to all-time highs, ladies and gentlemen, back in that time of this phase over here. And we didn't even go into the extreme greed territory at that time. So bada bing, bada boom over here, ladies and gentlemen. It's just absolutely clear that we can go back and forth and distribute even on this. And that is why I love this thing as so much, because you could teach a monkey to trade only the crypto fear and greed index with a strategy, of course, within reason. It's not the best indicator out there, but it could definitely give you a very strong general direction. It can't so I guess the drawback for the crypto fear and greed index is that it can't give you a strong timing because it can go into the neutral and come back down. And that's why I said at the very least, go back into the neutral territory before we can make a clear, concrete direction on whether it's going to come back down into the fear before moving back into the extreme greed territory. Because back here, you can see we had a very strong relief rally, came back down to extreme fear, but then it went also back up into extreme greed, is what I'm saying eventually. So from a timing perspective, you can work against it at the same time. But right now, since the first time we've entered extreme fear for, months and months, ever since of this year of 2020, basically when we had the major drop, this is why I'm also very bullish on Bitcoin as well. So use that to your advantage, ladies and gentlemen. I mean, it is what it is. I gave all the evidence, and I think there's just bears out there right now who have a wave count with that ending diagonal as well. That as much as it looks great, I've given my evidence approach on why I think it's not the case. I've given every single evidence-based approach on why I think there's a bull market continuation from top down, from bottom up, everything. I've talked about the crypto fear and greed index. I talked about every single pattern exhaustion, every single pattern recognition. What could go wrong here, ladies and gentlemen? What could go wrong? And this is why I'm saying this is why we need to use the context of every single time frame, every single indicator, every single asset out there, including Ethereum, the Bitcoin dominance, the USDT dominance. I don't know. Am I missing something here? Maybe. Maybe we're just going to go move to the downside, but I've also given my evidence on why that's possibly not even the case as well. So, yeah, that's the overall gist. Um, of this. So let's go over some questions now. Someone is asking if Bitcoin closes below 103K, does that mean we should or we will enter a very likely a bear market since the close below it? Okay, so this is a great question, ladies and gentlemen. Very, very good question. Let's talk about why the moving averages is very important, okay? So if we start from a clear slate, um, someone talked about the 50 moving EMA. First of all, number one, don't use EMAs on the macro. They're absolutely useless. You want to use the SMAs, the simple moving averages, because the lagging perspective of the EMA versus the simple moving averages is completely different. The data behind that, the math behind that is also very different. But the 200 moving average has been historically, from a market psychology standpoint, the most important historical level of looking for major resistances and major support levels. Okay. So I think this is the 200 moving average. Yeah. Okay. So yeah, we are at an iffy spot. Okay. We are at an iffy spot when it comes to this because we've broken below it. We've tried to get supported on the 200 moving average, but we've also broken below it. However, we will know once we actually get a retest of it. If this starts to slope down, the first major retest of it will determine whether we're in a bear market or not. And that has always been the case for this case over here, especially with the 2020 bear market that we entered over here. This was the major rejection that we had, and that led us to the bear market. Okay. However, the current bull market that we're in, boom, we've retested it below and we came back up. Came up, retested it, came down and redistributed, and we went up. Came down, retested it, redistributed, and came back up. We came down. We're now going to distribute, which is that next phase, whether it'll break up and then we'll continue up for that extended fifth wave, that is what we're trying to determine. So the 200 moving average is arguably the most important. So the bears in this regard have done one good thing, which is break below the 200 moving average on the daily chart. That is actually a very, very good news from a bearish perspective. But it's far too early to transition into a bear market, is what I'm trying to say. So hopefully that's helpful, okay? So only the 200 moving average. I don't look at EMAs, I don't look at anything else. The SMA, it's the perfect lagging indicator when it comes to the moving averages. You use the default settings, I believe it's 14 candles for how it's being calculated in terms of the actual uptrend or downtrend shift. So that's that. Now, that's a very good question. What else? Would it be possible for an impulsive wave to have wave 4 as a triangle, but the wave overlaps only with wave 1 of the impulse? Would that be still valid? Traditionally, you don't want to have any part of wave 4 entering the territory of wave 1, but if you have a triangle that may overlap where, a certain subwave of wave B or D, maybe the BD trend line overlaps into the territory of wave 1, it's still technically valid since the termination point is ideally below the wave 1 point. That's where you don't want to have overlaps, but at that point, you're probably in a different pattern recognition anyways. You're most likely in an ABC correction where with wave B, is or the wave X of AWXY is most likely as a triangle. Could you elaborate on the timeline of the extended correction given the drop is currently exceeding 1-to-1 duration, please? Um, I'm not sure what you mean by 1-to-1. Maybe you're talking about the ratio of this wave 1-to-1 here. But again, I don't see this as a larger corrective move. I'm seeing this as part of a corrective move that's working into a diagonal. So there's really no timing regarding to that aspect as well. Blackson kept saying, I'm curious if governments or one percenters are trying to leave us normal folks holding the BTC gold bags. Um, so that's a good question. I think even from a capital rotation perspective with gold, I think a lot of people are going to rotate back into crypto. I've also given my thesis on that as well on Twitter. If you look into what I said about the 100 gold argument, there's a 100-day lead on gold usually. If you look at this, traditionally, if you have an extended fifth wave, I mean, gold is in an extended fifth wave as well. Nobody wants to believe it, but it happened in real time. So if you don't want to believe, an extended fifth can happen for Bitcoin, I don't see why. But the most important thing is gold, traditionally, when it did its, pullback, that's when Bitcoin has actually followed through and actually did a rally as well. Gold moves first, Bitcoin follows harder. So that's something to keep in mind. And it's actually happened in that regard as well. But what's most important is it's also aligning with gold's a larger extended fifth wave, which is arguably still in a very bullish structure. Actually seeing 5,000 to 10,000 um, per gold value as well. I do think that gold is still in historical rally, in my opinion. I think we're just at a phase where we're going to get a larger wave four pullback, which is going to give a little bit of a relief rally, a relief pullback, which is another piece of evidence, if you want me to say, that that's why it's just that much stronger evidence that Bitcoin is going to be going for a larger move to the upside. Armin is saying this might sound idiotic, but could you please make a BTCD comparison with May and June 2020? No, you can't because this move here. So this is the important thing. So you got to use the context of the Bitcoin dominance in its local time frame of the current cycle. And since it's also a metric between values 0 and 100%, it's very difficult um, to say that it's comparable to the previous cycle. As you can see, the previous cycle, we had a clear five-way structure as well, right? Where we created an ABC to the downside. The best way to look at the dominance is by cycles as well, basically, where we reset the entire dominance, usually maybe a new price floor on 34%, that this is a new five-wave structure. And then whatever wave 1, 2, 3, 4, 5 happens next, that's kind of our next kind of directional phase that we're working in, since it's moving so back and forth. There's no end game to the Bitcoin dominance. That's why there's a value between 0 and 100%. That's why it's very difficult to actually even count an Elliott wave count for Bitcoin dominance, which is a fair argument to say. And that's why I'm saying the best way to distribute the or kind of chop off the actual timeline for Bitcoin dominance is just by cycles. One is going to be the 2018 run all the way up until the 2020 run where the bear market actually happened, right? So that's one way of looking at it. What else? What's your cancellation point for the key scenario of the extended fifth wave? Basically breaking the previous low, man. Basically breaking the previous low. So if we go back to the actual Bitcoin count, oh, and Bitcoin's pumping, guys, by the way. The only count that I'm actually currently seeing, which is still arguably very hard for me to believe, is a possible diagonal scenario, which is this. This entire move was a WXY structure. And we have this wave as an ABC to the upside, but I've already given my reason that this is very difficult for me to believe as an ending diagonal. So maybe that one small market inefficiency can not make up for what's happening here in the larger time frame, for which is why I'm also possibly believing that this is a possibility. But again, that's the only way where the confirmation is going to be a break of $71,000 and then a bounce up to again 100,000 six digits, and then another move down to the $50,000 levels. So you have a long way to go even to validate just this wave four of this diagonal, and then you have the problem of people believing whether it's going to enter the territory of wave one or not. So that's one way of looking at it. So the only way I'm seeing it is possibly a diagonal of some sort. Let's see. No, and I just answered that question. Some of this Victor is asking, what is the implication for Bitcoin dominance being wave two? Can we go 100% on wave three and beyond? No, it's a value, fixed value between 0 and 100%. That's why you have to chop it up and work with a price floor with each new cycle. Looks like Litecoin is looking to fly right now. I'm not going to go over Litecoin. I've already done my take on Litecoin. What do you think about Total 3 and others? It would be more reasonable to focus on that since, unlike most altcoins, their charts didn't go to zero. Yes, I think Total 3 is also showing possibility of working in extension as well, possibly in a wave 1, 2 of some sort. So this is definitely a case here. Um, Keep that in mind. So I do think that there's a possibility of going for Total 3 extending. Um, Someone's asking, what do you think about Total 3? Okay, Eric, can this be a wave? Can this, what? Okay, can this be a WXY expanded flat with the 3-3 structure on the daily and the Y being composed of 5-3-5? No, I've already explained on why this is not a WXY. You're gonna have to rewind. I talked about why this is not a combo structure because within a double zigzag, you need to not break the previous high or the origin of this previous wave W. So this being a wave W, X, and Y, I've already explained why you can't have two zigzags for waves W and waves Y. And that's the biggest misconception, and a lot of people miss out on in terms of the alternation of a WXY structure. Okay. Um, all right, ladies and gentlemen, I think that's it. I've given all my evidence, my evidence-based approach on how this can be playing out. Hopefully that was helpful. I mean, if you guys are interested in joining the Discord membership again, I do give, periodic updates in there as well. So if you're interested in joining, the links are in the description below. Please don't hesitate to contact me. We are having a huge Black Friday sale. If you want to get in, this may be a good time. Also Patreon, monthly updates as well. If you want to join that, Patreon update at X Global, just look for it. That's also another way to join. So there is a way to get more content from X Global, me. If you want to get more content, there is a way of getting it. Otherwise, I'll see you guys in the next public update. If you're not following me on X at X Global, please do give me a follow as well. I do a lot of public updates on here, which is pretty much arguably enough for a lot of people as is. So thank you very much. I will see you guys in the next live stream. Thank you very much. Have a fantastic rest of the week. Okay.